Well, good afternoon, everybody. A little bad news because you didn't get a video this morning, which was Tuesday, because my recording software messed up somehow yesterday. Recorded, everything seemed to be fine. I got the audio, but there is no video, so it just disappeared. I had to change some settings in my recording software, and hopefully that doesn't happen again. But I didn't want you to miss out on a day this week, so here I am on Tuesday checking in with the market, see what's going on. You can see the S&P is down quite a bit today, almost a full percent, 0.75%, almost 0.8%. So let's see here. What are we going to do quick? Let me bring you up to speed on what I did yesterday. Uh, was a green day. Things looked pretty good. I basically ended up grabbing another position in Celsius and sold a put, 28.50 put for January 10th, just the end of this week. Real quick one, little money grab, I think, and sold that for $43, and current price is 29.27, so we're out of the money still. And yeah, we made $6 on that since yesterday, and not too bad. We'll just keep an eye on that. Been watching this though is Intel, our covered call on Intel. Intel price is dropping, so it had a big drop yesterday, and so that basically makes our covered call worth more in the immediate or the short time frame. So that's exciting. We're actually at 62% of this. We just put this trade on last week. 62% of $50 is $31. That's not a bad one, to be honest with you. We're down $42 on our holdings, our 100 shares of Intel, but we regained $31 of that here on this covered call alone. So that I might just do, you know what, let's do something with that. Let's close that. We're at 60. Let's set that to close. I don't think we've done this yet. So right now what we're doing is setting to close position at close at the profit of 70%. That will be 70% of the cost of the trade, which we gained $50. So basically, when this gets to $35, it's going to sell automatically behind the scenes, and we just get to keep that part of the premium and take that money and proceeds and apply that to another trade. So let's do that. We're review and send and off. So that trade is now working. Obviously, it will not get filled until we get the price that we want. So if Intel drops just a little bit farther, we'll lose more money on the shares we hold, but we will get up to, what is that, 70%? What did I say, $35? Well, $35 to offset that, and we'll turn around and probably apply another covered call when Intel comes back above that middle line in the Bollinger Bands. So Celsius, what did I see yesterday when I was putting that trade on? Actually, it was a green day. Anyways, I was looking at the tailwinds. I thought the market was going to be strong this week. Today is telling a different story. So that just goes to show nobody ever knows what's going to happen. But in the meantime, what ended up happening was I wanted to play a short-term trade on Celsius because I think it's going to head to the top of the Bollinger Bands anyways, no matter what. But with a stronger market, I figured it would get there a little quicker. So I put the Celsius trade on. Again, we're up 14% on that in one day. So that's pretty cool. What we're looking at $500, $508 profit year to date on the account. That's pretty cool. Let's just see if there's anything fun to put some money into today out here. Let's look at some charts. Riot, okay. We know Bitcoin went up, touched 100,000, 102,000 again. It's going to maybe consolidate, maybe go up, maybe go down. Who knows? But I'm still interested in the Mara, still interested in the Riot. Gold, what's gold doing now? Okay, gold's bounced off, come up, pretty much grazed that midline, is headed back down. We'll probably sell another put when it gets down near here again and play that. Mara, yes, Mara headed up. Actually, we had a pretty good profit on Mara yesterday. I want to say we were up in the 35, 38% range yesterday. So I'm going to watch that one closely. Yeah, we're up $150 on that trade we put on last week. Potentially $515 if we go to expiration, but we're not going to do that most likely. We're going to roll it, we're going to close it, we're going to do something, but probably not going to let that expire. Intel, we already know what's going on there. Sony, let's look at Sony's chart. Okay, Sony's consolidating right around that midline of the Bollinger Bands. Still marked as oversold though, so that's a good sign. If this drops down anywhere below this midline, I'm strongly going to consider a position because it doesn't get down there all that frequently. AT&T oversold, headed down to the bottom of the Bollinger Bands. Let's see what we got here. It's didn't get great premiums on it last time, but money's money. So earnings are coming up January 24th, so we would want to hold past that most likely. Uh, Short, real quick squeeze here. Let's see, selling puts 9 cents, not appealing. Monthly, $21 for a $22 call. Not terrible. If we think it's going to go any, let's see, potentially, we think the market's going to turn by the end of the week and raise AT&T up a little bit beyond the 22.50 mark. It's only 10 cents away. You know, we could take a stab at in the money put, but not super interested. Let's see. Carnival Cruise Lines. Oh man, getting down there. What's our position doing over here, Carnival Cruise Lines? We are down $7. So we are definitely in the money. $24 strike price. We are just under that. So I will not mind being assigned some Carnival shares at that price. But you know, we got to look at the overall market every single time we make a decision. So HIMS. HIMS is $23 strike price. We're way above that. I mean, we're up $91, almost 40% on that, and it's just about a week old, I think, that trade. So uh, pretty sure that's stalling out here near the midline. Might consolidate, continue to go up, go down. But what we care about is time. If it as long as it doesn't come back down to that's a $23 strike, which is it's a fair bit away, $4 away, 4.25 away. So as time ticks on there, we can get into next month or even late in this month. The extrinsic value is going to be on our side, and we are going to at some point be able to close that for probably 50, 60, maybe even 70% of the $230 premium we collected. So Pfizer, let's take a quick peek at Pfizer's chart. I mean, that, man, I kind of wish I held that to get a little bit more of that premium, but my goal in Pfizer is actually to get a position. So I really want to see that come back down below the midline, and hopefully it does so. We'll be selling a put probably in the $25 range and with hopes of getting in there. So silver, we are still in, just crossed the midline. Silver, we have a position. We're down $9 overall, but I think we're still sitting on some premium we collected when we sold that put. And Celsius, we've already talked about. Chewy, we do not have a position on. See, this is like up here yesterday when I saw this come up here. I kind of wished I had a position there because that would have been a good time to sell a covered call when it touches the top Bollinger. So one other trade I'm considering for this account, and I'm not sure I want to do it, but I'm strongly thinking about it. It's outside the scope of this account size, but I think I can pull it off if I manage my other trades, is I've been looking at AMD. I have some plays in AMD in my bigger accounts, and basically what I would consider here is what they call a poor man's covered call, pretty much buying a leap, which is well into the future, selling a buying a call way out into the future and can immediately sell I put against it. So both want to be done on a red day. So we do have a red day with AMD, red day in the market. So this may actually, let's just see what the numbers work out to be here. So trade, theoretically, they say Leap should be a full year out, but that's an awful lot to pay for. That'd be January 2016. Yeah, so I would want to be, man, in the 70% or 70 delta range. That would be a $3,500 purchase to buy that call, but I'd own it at $110, or I'd have the option to buy it $110 a year from now, which I think AMD is going to up substantially. I know they're working on something really dedicated to AI, and yeah, excuse me, phone's ringing again there. But basically, we're going to see something from AMD that is going to just it's I don't know if it'll rival what NVIDIA is doing, but they're going to have their own dedicated AI chipset coming out without a doubt. So, uh, dang phone, thought somebody should have got that by now. But anyways, yes, looking at a long-term leap here. So maybe we just don't go out that far. Let's look at 3/4 of the year. September, I had looked in here earlier, yes, and definitely didn't pull the trigger on it, but we'll be looking at somewhere in the $28 range for a 115 covered call. And so let's see, bid ask 2028, so we could possibly get down to the 2010, but that's locking up $2,800 in premium. So now what will we do against this? We would look back. And I think we're going to hear some good things on earnings. So this is a bit more of a gamble, but let's look out to February. We could sell a put that would, give me just one moment. All right, sorry about that. Nobody else was available to get the phone and I didn't know it, so I just took the time to take care of a customer. But anyways, let's take a look here at what we have available for February, I think is where we were. So what we would do here is we would sell a covered call again, sell a cash secured put, or sell a put against our covered call and regain some of that premium pretty much instantaneously. So if we went to look at, let's see, let's go to the curve. Okay, so this is going to be, let's analyze that. Okay, so our break even, I'll zoom in a little bit here. Not too far, but so our break even is going to be right around 143, we'll call that. About 143 is going to be our break even on this. Now, what we would do is look at, back to the table, say a February, or I don't know if I want to go to January. I could do a January. Let's see, cash secured put in the 30, 35 delta would, that's going to net us roughly 2 to 230 premium right back on the money we would be spending, which would be 2,800. And then somewhere over the next 9 months, we would continue to sell, roll, do whatever we needed to do, more puts against this. hopefully, as AMD would appreciate, up along the way, and kind of trying to make money a couple different ways here. So it's what they call the poor man's covered call or poor man's wheel strategy, or a number of different terms out there for it. But basically, so January 17th, do we think AMD is going to drop back down here? So 33, we could probably get that for in the neighborhood of, okay, so between the two, mid price would, oh man, let me figure this out. So our mid price on the two is 26.32. That throws me off. 26.32 debit. Why is that a debit? Clear that trade. Let's close that. Let's go back to September. Did I not do this correctly? We would be buying a covered call in the, wow, that has jumped up dramatically since we just looked at it. It's about 3 grand now. Um, hmm, what has happened in the last so many minutes? Nothing dramatic with AMD's price. Okay, maybe I'm just not remembering the right numbers here. 70, 68. We're looking at the 115. Okay, so 28.50. Okay, so we would be have a debit of 28.50 to sell this, to buy this covered call. So we would be paying $2,845 for the covered call for September 19th at $115 strike price. So now let's go back and say, look at the January 17th. Let's look somewhere down and let's play it safe. Let's go closer to the 30 delta over here. And I'm going to say 30.33. I think I can get a $2 premium on that. So basically, it'd only be debited $2,624, and I would both have a covered call for September and a sold put for January 17th, just a couple weeks from today. So let's try it. Let's just see if we can't get that filled. And all right, so we have 2 working orders. We're trying to get in for place order 12. Let's just go up to the mid price. We'll go a little above the mid price just to try and get it done. And did that just, I saw a blip. Like, nope, didn't go through. I want to say the 25 was the number that I had originally seen. We'll just pop that in there. And we are filled. So we got both 2 positions in AMD now. So we have a covered call, which is well in the money because of the fact that we paid for that premium to be, or paid for that strike price to be much lower than the current price. So we basically $15 of roughly intrinsic value, and everything else we paid for was extrinsic value, which is time and decay and all that other fun stuff. At the same time, we gained about $2 on the AMD put for 2 weeks from now. We got that for $199. So yeah, let's see how we enter that into the chart. So we're going to have a new sheet or tab, and it's going to be AMD, and let's just quickly title that properly, AMD. And okay, so what do we do first? So let's see, on today, we pretty much the first thing we did is we bought a call for September 19th at a strike price of 115, one of them. And I want to say, oh man, what was that? 28. I'm going to have to come back and modify these to be sure. 28.50, 1.13 cost. I'm going to have to look at the buying powers again too. So today we also sold a put against that just for about a week and a half from now, not even 2 full weeks. And we did that for, oh, what was that strike price? The 125. So realistically, that could go against us too. If it goes down, AMD goes down below 125, we'll be assigned those shares, and then we will physically actually own 100 shares, which I do not have enough money in this account to cover right now, but I can move it in there if I need to. Or we roll the strike, we sell for a loss, we do whatever we got to do. But yeah, so what do we say? We got 1.99 on that price there, and 1.13. And oh, this is what we've got to do here. This is not a credit. That is a cost. I've got to make this a negative. Okay, there we go. So maybe I shouldn't title that. No, that is the price. So let's this is why I haven't released the spreadsheet yet too, because there's a lot of little bugs that got to be worked out in that. See, I've got a less than a penny, blah 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 blah. I probably should eliminate that. The reason I have that coded in there is because it would throw, an NA or hashtag ref or hashtag NA and an error that just didn't look correct. So, but anyways, I'll work on the spreadsheet a little bit more here, but I do have the basic data entered, and that's that. So other than that, we've got a lot going on here, and let's see. Where are we at? Yeah, we're up to 66%. Two more dollars until it falls just a tiny bit more. We're out of this position here with a 66%. We'll have a 70% gain on that. Wouldn't be surprised if that happens sometime later today. But as always, thanks for watching. Currently up 486 profit and loss for the year. And that's pretty good for 7 days into 2025 on a $10,000 account. I'm not going to complain at all. I mean, that's 5% in 7 days. That's phenomenal. I know it can't continue exactly like that, but here's hoping. So thanks for watching. Take care. Remember to like, share, subscribe, and I will catch you later in the week.